Yo guys, Dead Prayers here, coming to y'all with another video. Today we're going to be going over some charts I like for this upcoming week, analyzing a few different tickers and a few different time frames, and I'll be giving you guys my thoughts on each. Trading is 90% preparation, so let's all get prepared, get your charts out, and let's get ready for some technical analysis. First ticker we're going over, guys, is ENPH, ENPH Energy. A hot start to start off the year as we look at the year-to-date chart. One of the few stocks that are up pretty well on the year. It's helping fundamentally that it's a solar company, and a lot of federal money and a lot of interest and investors are pouring into the green energy and renewable energy spaces. Technicals are looking good here on the chart, though fundamentally ENPH is very overpriced. Just to give you guys some examples of how overpriced ENPH is fundamentally, we could take a look at Google. If you take a look at Google's fundamentals, Google has 56% gross margins. ENPH is only at 40%. Google has a price of sales of around 6, whereas ENPH is around 23. If you adjust ENPH's price of sales closer to their gross margins, then ENPH should be around 4 to 5 price of sales. And if you do the math on that, then the ENPH's true fair value would be around $60 to $70, whereas it's $279 right now. That's how much you guys can see that solar energy and solar tech has just blown up this year. A lot of investors are pouring in thinking that solar tech is going to be the new semiconductors of the next 5 years. First thing I'm going to do on the ENPH chart is come to the weekly. And once I'm on the weekly, I'm going to draw some support and resistance lines using the horizontal ray feature on TradingView. The first resistance points I see on here are right here when it made this run and rejected after a little bit of consolidation. Right there. And we can see that this resistance point is supported by it also rejecting here. You can see this failed breakout right here, where it did eventually break through here, but we'll talk about that in a second. My next support line would be here, where you can see ENPH was supported. Give it right there. It almost broke through this support line, but buyers came in pretty fast each time, both times right there, and that could be seen as a double bottom. And then I'd also do another resistance line right up here. You can see this resistance line right here on this failed breakout attempt is where now ENPH is being held at support. Now that we have all the support and resistance lines I want on the chart for the weekly, I'd break it down more to the daily and I'd give it a better look here. And we could see ENPH in the last month has really been consolidating at these levels over 272. So then I'd want to first take it down to the 4-hour. And I see kind of a bullish flag here, a bullish pennant forming with the flagpole here and a lot of consolidation here where it's being held up by support. So then I'd probably take out my volume profile because I'd want a volume profile on each of them. And I'd come to the hourly. Once we're at the hourly, I'd try to look for areas where the point of control, I could show you closer. On the volume profile, you can see these red lines. That's the point of control. The point of control is just where the most volume was traded on that stock that day. So that's where a lot of buyers and sellers are coming in right at that level, a lot of volume. And you want to be chasing that volume because that's how you get those quicker moves. So I'd look for where points of control are stacked up, and I draw a resistance point there, and I could see on this hourly chart these 3 point of controls right here match up pretty perfectly. So I'd probably set a horizontal ray right here, and then that would be in line with 350, around 300.5, and that would be my final resistance point, where I would assume that this bull flag is breaking out to the upside if it crosses over 300.5. After I do that, I would go and start drawing some anchored VWAP lines to get a better look. And to get the anchored VWAP, you just come here. There we go. Anchored VWAP is right here. And then we're going to draw some anchored VWAP lines starting from this trend. You just click in the anchored VWAP, just anchor there and give you a volume weighted average price around that on that trend. So right here I click and we can see it's been holding up the anchored VWAP pretty well. And then I'd probably go here and do another anchored VWAP from the top. We could see that 300.5 is in line with the top line of the volume weighted average price, and that's good. Once that breaks over those two volume weighted average prices and it breaks over this 300.5, that would be a confirmed uptrend for me, and that's where I would enter some month out calls for another leg up to, I'd assume, 320, 325 area. If we break it down to the 2 hour here, we can see it did make a double bottom here where it bounced on the 272 support and it bounced again here. And some traders, a little bit riskier, some of them I could tell would probably go and draw a trend line here and try to get all this like to fit in a little trend line and try to make a play over 285 like right here, or 287 right here, back to 300. I personally don't like trading in this little chop zone like this. To me, it's just not high level trading, and over the long period, I think it's more losing trades than winning trades, especially in the condition the market is in now with rates rising. Trying to trade those in between indicators and in those chop zones is not smart and somewhat just throwing away money. It's better to wait for a clear break of an indicator, either to the upside or downside, before you enter a long or short trade. And of course, like any good trader, you also need a plan for if the market comes down and the stock goes the other way than you expect. So I would say if ENPH drops that 272 support that we drew up, that it would very likely meet that 263.90, 264 area where the EMA 9 is on the weekly. There is not a lot of volume up here where it blew up really fast after that little gap up in the last month. And it could fall very fast on a market downfall because of that, where you see this point of control down here at the 160 level and a lot more volume at the 180 to 160 area. That's where buyers were coming in mostly. You could see here on the volume profile, fixed volume profile on the weekly, not many buyers or sellers are coming in up here at these higher levels at 279, most likely due to those fundamental reasons that we stated in the beginning of its price to sales and its gross margins being very highly valued. Next stock and ticker we're going to be going over is Airbnb, ABNB. We'll be looking at the 1 hour right now. I'll break it down to the daily. And on the daily, I'm using the Heiken Ash to just make it easier to see the candlesticks, but you can see a clear inverse head and shoulders here with the neckline around here, and you can see it's just pulling back right now once it reached that neckline on the market dip. But what I'm going to do here on the daily is get my anchored VWAP, and I'll set it right here from the bottom of this trend. We'll get those anchored VWAPs with the upper here, middle, and lower. And then I'll break this down to the hourly now. And we can see this anchored VWAP that I set from this low coincided perfectly here with this little wedge forming. And I do like Airbnb to break out of this inverse head and shoulders neckline and get back to that neckline and even break over it. This might take a longer time. You can see I'm using the longer time frames, the daily and the 4 hour hourly. So this play might take longer to develop. It might take a month or two, especially with the market conditions we see now, where every run is kind of getting pulled back here. I would really like to take Airbnb over this upper VWAP line. So I'd set a horizontal ray right here, do it right over here at 118. And I'd get ready and take calls on Airbnb once it rose over 118. Probably I'd take it only on the hourly. I wouldn't trade this off the 5 minute because you probably get a lot of whipsaws and fake outs. So on the hourly, once you get a full candle over this 118, I would get into month or 3 month calls on Airbnb. Looking further at the Airbnb daily chart, we set that buy zone at 118 right there. We'll do an anchored VWAP from this top of here to this low. We can see the middle VWAP line coincides pretty perfectly with the buy zone. We want to take profit around that 140. That's where we'd expect this inverse head and shoulder to break out to. And that coincides perfectly with these supports that are now resistance. We can do a fixed range profile here too to get a better idea of where the point of control is. And you can see here the point of control does coincide with our middle VWAP line and our horizontal ray that we drew on there. To get an even better idea, we can do another fixed range profile from even this top to this low. And we can see there's a volume shelf from here where there's no volume here, all the way to here. That's going to coincide with our take profit area. So I really like this trade. I'll be looking at Airbnb throughout the week and trying to hop into calls on a break of 118.50, 119 area. Next and last ticker of the video, guys, is BABA.We'll. When looking at this daily chart with the Heiken Ashi, the first thing that I'm seeing here is a very bearish, bad chart. First thing that I see is this double top forming right here and right here, where it rejected both these tops and the price went lower, but was held up by a rising wedge. We'll pull out the trend line here. There we go. You can see this is a rising wedge in a bearish downtrend, which is a very profitable trading strategy when you take these to the downside. So I'll be drawing some horizontal ray. First horizontal ray will be right here. This will be my buy-in for puts once it breaks under 86.53. Do some more right here. This would be the next support, 78. That would be a very nice move on puts. And then the final support would be down here, around 73. And this is a nice gap down right here, 86.53 to 78.20. That would be a big move for weekly puts or 2-week puts. And with the market in a downtrend right now, this play has the appearance that it would happen very quickly, like in a week or two. The other two plays I went over, more longer time frame plays that would probably take more like a month to play out. Thank you guys for watching. More chart analysis videos coming soon. My $250 giveaway is still live on my Instagram, ends this September the 9th. So if you haven't gotten in, go ahead, check the description, go to my Instagram and hop in there.